2, 3. 1, 2, 3. Let's go.
Hello, welcome back to Teaching Crypto. This is MrFOMO. Today we are going to talk about the timeline of the Terra Luna Collapse that triggered one of the hugest crashes in the brief history of digital assets. Before we get started, click the subscribe button and bell icon so you don't miss any of the latest updates from us at Teaching Crypto. If you weren't around, or just not aware during the last bull run, you wouldn't know about Terraform Labs, Luna, Terra USD, or how much money investors made and lost with it. You wouldn't know how the burn mechanism for Luna was all the rage, with every crypto aiming to become deflationary like Luna, even Ethereum. You wouldn't know that they were the catalyst for all the other crashes in the crypto market and for the crypto winter that followed. You might know about Sam Bankman-Fried and FTX, but most of the world largely ignored Do Kwon and Terraform Labs, especially the US media. It wasn't the trading platform Tom Brady and then-wife Gisele Bündchen endorsed. They weren't the kids of prominent Stanford professors. They didn't bankroll politicians across the political spectrum, and they didn't have polyamorous penthouse parties in the Bahamas. Their story just wasn't salacious enough for the national and global media. But it was all their fault. Those of us who were around know that on May 7th of 2022, the algorithmic stablecoin UST, or Terra USD, lost its peg to the US dollar. Over the next 2 days, the token linked to Terra USD, Luna, dropped from an all-time high of $119.20 to less than a penny. This drop wrecked investors across the market and wiped out gains that were being celebrated by those investors less than a week prior. That isn't the real story, though. The real story involves a similar theme in crypto. These unregulated financial products are a reflection of the morality and ethics of their creators and not necessarily digital assets. Basically, computer code is only as good as the people writing it. Let's start from the beginning. Do Kwon and Daniel Shin launched Terra Luna in January of 2018. Less than 4 months later, Cyrus Younesi of MakerDAO predicted that the algorithmic stablecoin and Luna's attachment to it would cause the blockchain's demise. Despite his prophecy, no one seemed to listen. Singapore even incorporated Terraform Labs just 3 days later on April 23, 2018. Terraform Labs held their initial coin offering on January 30th, 2019. The white paper was published later in April. During the seed round, the cost of Luna was 18 cents. During the private sale, the cost was 80 cents. If an investor was able to get their hands on Luna at this point and simply held all the way to the all-time high, they could have turned a $1,000 investment into over $660,000. 2020 was a huge year for Terraform Labs. Luna began offering staking to investors in February of 2020. In July, they launched the Anchor protocol, which offered high-yield staking and the ability to borrow against digital assets. In September, they announced and later launched on Ethereum and Solana the UST stablecoin Terra USD. By December, they launched Mirror, which allowed customers to buy synthetic or tokenized stocks, sidestepping the stock markets around the world. While the price of Luna was skyrocketing in 2021, things behind the scenes began to come undone. In September, co-founder Do Kwon was subpoenaed by the Securities and Exchange Commission in the United States over Mirror and the synthetic stocks they offered. By November, Do Kwon was publicly defending Luna and Terra USD from those claiming the two were on the verge of mutual collapse. He went so far as to say that such a collapse would be impossible. Despite all this, Luna's price rose by 58% in December of that year alone. In January 2022, the Luna Foundation Guard, or LFG, was created. By February, they raised over $1 billion to buy Bitcoin and use it to create a reserve system that would back Terra USD. The two largest investors that participated in the fundraising round were Jump Capital and Three Arrows Capital, more commonly known as 3AC. Things began to unravel even more in March of 2022 when Al God and Gigantic Rebirth bet Do Kwon $1 million and $10 million respectively that Luna would be below $88 by March of 2023. Their arguments included calling the relationship between the two tokens a Ponzi scheme. Judging by their price prediction of below 88, I'm not even sure they knew how much of a danger the codependence of these two tokens posed to Terra Luna and the broader market. Later that month, Do Kwon started what was later called the Curve Wars when he declared war on Curve stablecoin DAI, saying, "By my hand, DAI will die." At about the same time, one of the main investors in LFG, Jump Trading, proposed that the reserves created by LFG's Bitcoin buying sprees be redeployed to prop up Terra USD. It was an in case of emergency sell Bitcoin plan. Ultimately, their plan to prop up Terra USD failed despite the fact that LFG's Bitcoin reserves ballooned to almost 1.7 billion by mid-April and possibly to nearly 3.5 billion at some point. By early April of 2022, Luna was soaring to its all-time high of $119.20. By the end of April, the demand for Terra USD was so high that it drove the circulating supply of Luna to an all-time low of 346 million tokens, as Luna tokens were burned to help the Terra USD keep its dollar peg amid this period of high demand. On May 7th, Curve Whale Watching, a bot that monitors and reports large swaps, reported that 85 million in Terra USD was swapped for 84.5 million in Circle's stablecoin USDC. On the same day, a series of large Terra USD dumps took place on Terra's Anchor protocol and on Curve. These events caused the price of Terra USD to depeg and fall to 98.5 cents. On May 8th, LFG was forced to redeploy $1.5 billion in reserves to defend Terra USD's $1 peg. By May 9th, deposits on Anchor protocol fell to $9 billion from $14 billion in just 2 days. On the same day, Anchor's token fell by 35% and Terra USD fell all the way down to 35 cents. Through all of this, Do Kwon continued to joke and make flippant comments on social media like deploying more capital, steady lads. By the 10th, claims that an attack was carried out on Terraform Labs and their blockchain began to appear on social media. On May 11th, many traders took out futures contracts betting on higher Luna prices and got destroyed. Market-wide, there were more than 63 million in liquidation. The same day, Do Kwon was revealed to be one of the pseudonymous co-founders of another failed algorithmic stablecoin, Basis Cash. By May 13th, the price of Luna fell more than 99%. The price of Terra USD fell to below 15 cents. The blockchain was halted twice. OKX and Binance stopped trading Luna, and Do Kwon was forced to submit a revival plan that included the creation of 1 billion new Luna tokens, further diluting the value. Terraform Labs, Luna, Terra USD, LFG, Mirror, Anchor, and everything else had effectively been crushed. Do Kwon was now going to be on the hook for $11 million in bets on the future price of Luna, and he and several others were possibly facing arrest, prosecution, and jail time. From May 14th through the 16th, data analytics firm Elliptic and LFG themselves confirmed that LFG depleted their BTC stores from 80,000 coins all the way down to 313 coins. This was a loss of over $3.5 billion of Bitcoin and other assets just trying to protect the Terra USD peg. The Terra Luna ecosystem lost over $28 billion as investors fled the blockchain in droves. By May 20th, the collateral damages started to become apparent around the world. Hage, a South Korean venture fund and Terraform Labs backer, reported a $3.5 billion loss by themselves. Later, companies like Celsius, Three Arrows Capital, FTX, Alameda Research, Genesis Trading, Voyager Digital, and more would fall as a result of this crash. All told, the most conservative estimates would claim that this crash led to over $40 billion in losses across the crypto market, with tens of millions of individuals and companies bearing the brunt of those losses. Do Kwon would finally propose, and the validators would approve the creation of a new blockchain that would use the name Luna. This new blockchain would not incorporate any stablecoin, let alone an algorithmic one. The old blockchain would exist as Luna Classic, or LUNC. It's no longer attached to a stablecoin either. The one feature of the blockchain that made it so attractive to investors, the burn mechanism, was now dead and gone. Both of these blockchains still exist. The new Luna blockchain has a current price of around 44 cents, and Luna Classic's current price is a fraction of a penny, a far cry from $119.20. Do Kwon became a fugitive from justice at this point. A red notice was issued for his arrest by Interpol in early 2023, despite him saying he was not on the run. He was arrested in Montenegro, coming from hiding in Serbia with his former finance officer Hang Chang-jun in March with loads of falsified documents to conceal his identity, and sentenced to 4 months in jail. His sentence should be up soon, but extradition to the U.S. on fraud charges and South Korea on breaching capital markets charges are still on the horizon. South Korean prosecutor Dan Suk-han, who is leading the investigation, told Bloomberg that the charges in his country could carry a sentence of as many as 40 years, and that Kwon could be tried in the U.S. and South Korea and forced to serve the sentences back-to-back instead of concurrently. He may very well spend the rest of his days in South Korean and U.S. prisons, and forever be known as the Crypto Crash King. The moral of this story? Digital assets aren't inherently bad, but they do sometimes attract bad people. This is also another example of crypto criminals being brought to justice, proving that blockchain and digital assets aren't really the safe haven for criminals that some people would have you believe. That's why it's important to do your own research and keep it locked here on Teaching Crypto. For AZ Crypto, this has been MrFOMO. Don't forget to like, subscribe, and check out the merch store. See ya!